Oh, thanks for inviting me to speak here. So I have 45 minutes, I believe. So we'll do like 35 minutes or 40. What's the total time? I have.
We're booked up for about an hour. So yeah, about
Oh,
35
okay.
to 40 minutes of talking and then about 10, 15 minutes of
Okay.
Q&A.
Sounds good. So I'm one of the co-chairs of the IEEE Blockchain Initiative. So today I'm going to talk about the blockchain ecosystem. So here's the outline of my talk. First, I'll talk about Bitcoin. It's hard to talk about blockchain without an intro about Bitcoin. So we'll spend a few minutes on that. And then I'll talk about the evolution of this field, starting from Bitcoin and where it is today. And then before we get into the part 4, the ecosystem, unfortunately, we have to learn some new terminologies. That's the third part, blockchain fundamentals, because without understanding some of the terms, smart contracts, tokens, it'll be really hard to follow the last section. So we'll spend a few minutes on the fundamentals, some terminologies, and then we'll dive into the ecosystem. So first part, Bitcoin. So Bitcoin was actually launched back in 2009 by this anonymous person who goes by Satoshi Nakamoto. He published a white paper a few months before that, like back in October 2008. That's when, as you recall, the financial crisis happened. And if you look at the first block, it's called the Genesis block in Bitcoin. There was a reference to this financial crisis. You can see on the message, a title of the news, was actually embedded in the first block. And basically, it's an electronic cash that does not depend on a centralized institution, meaning it's not issued by a bank or central bank or Federal Reserve. It's just it's on the network. We'll talk about that on the next slide, or next few slides. So to give you some background, so Bitcoin is a recipe that combines some of these concepts you see here, ingredients. Let me see the message. Is it something to me? Oh, okay. So some of the ingredients are shown here. So you can see 1976 public key cryptography. It's actually a key ingredient of how you engage with blockchain. When you create your an account on any website, right? If you have a username and a password, right? Anything, bank account or any website. In the case of blockchain, you have something similar, which is one is called a public key. It's just a long numbers, and then you have a private key. So yeah, it's a key pair. One is called a public key, the other one is called a private key. So that it basically it's from this paper or work that was done back in the 1970s, and then there's Merkle trees. And then there's timestamping. In fact, you can see the paper on the right side. Scott Stornada and Stuart Haber, they actually published a paper in the 90s of how you would, timestamp a digital document. And then few more ingredients like proof of work algorithm and then secure hash algorithm. All these things were put together, and that's how the Bitcoin was created. And the code was launched, as I said, in January 2009 on a mailing list, and the network effect started to take off, and it's basically deployed on a decentralized peer-to-peer network, and it's considered to be the first successful implementation of a digital cash on a peer-to-peer network. I mean, in fact, you can see there have been many attempts before. On the right side, right, you see all the way from 1980s, but that, and also you can see there have been other successful peer-to-peer platforms that doesn't have anything to do with digital cash, but just peer-to-peer protocols like Napster, which was shut down, Skype, still in operation, BitTorrent, still in operation, right? So Bitcoin actually was built, using all of these foundational, fundamental work and foundations laid for decades, right, before. Now, just to summarize, the original idea of Bitcoin was to serve as a digital cash, just like all these other guys were trying to do here, the Bitcoin previous attempts on a decentralized peer-to-peer network. Interestingly, what happened is it became a highly speculative digital asset. If you look every day, it's up and down. Any news that comes out from the government or anywhere, like country, like there was a time China was banning Bitcoin mining, it affected, and the Fed is talking about interest rate that affects Bitcoin as well, because the investors are you have all kinds of investors in it, not just the crypto investors, and now you have institutional investors in it as well. So it does, it's very volatile. So what you see in conclusion is, in red color, it's not stable like cash. Cash, you expect some kind of stability in cash, right? So it's not that stable, but it's historically been, as of now, the best performing asset, I think, as of today, and which does attract a lot of investors. And the second point is, when the protocol was designed, the thinking behind that was that these nodes will be run by individual, person, let's say, and that creates kind of a decentralized governance, right? It's like one person owns one computer, and they kind of participate in this, consensus protocol, and it should create, theoretically, some kind of decentralization or decentralized governance. Unfortunately, this architecture does not prevent from one person, like I could own hundreds or thousands of computers, nodes, and I basically can start controlling the outcome, or how much I can exercise power and the outcome of this mining, which I think we don't have time to talk about mining, unfortunately, because we have only 35 minutes. So in summary, what happened is, the Bitcoin network, as I said, it doesn't prevent one entity or person owning multiple mining nodes. It's become has come under the control of centralized mining pools. So it's not under the control of decentralized peers anymore. And this is, anyways, let's not spend too much time. This could be a whole topic of mining, how mining, and there are graphs. You can see websites that shows you, like, where the mining pools are located in different regions, and you can see, how things are shifting depending on regulation, availability of energy, and all that. So we will stop here, but the summary is, in spite of these drawbacks, Bitcoin set the stage for the blockchain revolution. Unfortunately, when you hear in the news, people always get to this drawbacks. They forget about other things, like, there's whole other blockchain is there. There's a lot of things that evolved. They always go back to this, this speculative aspect of the energy consumption. And anyways, let's move on to the next part. Now, Bitcoin set the stage for a new field called blockchain. And to put this in perspective, you can think of it as has gone through 3 stages of evolution since the launch of Bitcoin in 2009. So the first circle shows you, we call it the blockchain 1.0, or cryptocurrencies phase, where primarily Bitcoin and altcoins. Several coins were launched. Literally, they just took the code and made some changes, and launched another coin. Like if you listen to Litecoin founder, he basically took the Bitcoin code. I think he spent like 4 hours coding, and they launched another coin called Litecoin, and I think it's one of the top coins today. So that's what happened in the first phase. A lot of experimentation happened. tweaking things, adding new consensus protocols, and so on. But in around 2013, there was a white paper by Vitalik Buterin and Gavin Wood where they proposed adding some programmable feature on top of blockchain. Actually, they wanted to modify Bitcoin code. They were trying to socialize the idea, and they were not getting enough support to basically modify the Bitcoin code to add their programmable feature. So they basically then decided to just launch their own thing. They couldn't convince the community, Bitcoin community. So they launched their own, blockchain called Ethereum. And it went live in July 2015. And 2015 was a key year in this field. A lot of programmable blockchains were launched. Like this Ethereum got launched. Corda was launched for a financial application. Hyperledger, these two were enterprise oriented. Corda for like financial, for financial industries, and Hyperledger for like general purpose, like like multi-party environment, like supply chain. So that's kind of like the main focus they've been working on. So a lot of things happened in 2015, and that's kind of like the start of the blockchain 2.0. You can see the heading here, programmable chains. And then blockchain 3.0 basically is when a lot of other projects started to address the limitations of Ethereum, for example, like scalability, like energy efficiency, and interoperability, like projects you can see Cosmos, Polkadot, focusing on interoperability. And there were also lots of applications we will look. These are primarily just focusing on infrastructure. We're not talking about applications yet. We will shortly. And there were also other things like DAG and DLT. So this is what I refer to as blockchain 3.0. And if you want to kind of like understand all these terminologies, what that means, like, people use this interchangeably and it creates a lot of confusion. This is how it looks. So everything is on a distributed computer network. In fact, even cloud, forget about blockchain, even cloud like Amazon or any of the cloud services we use today, they're all on distributed computers. I mean, they're not in one location. They're like multiple countries, multiple, cities. And, the difference here is that the definition is here, it's basically a collection of computers that appears to us like a single computer, right? I mean, we use cloud, we don't, it just looks like you're using a single resource, right? So what makes the blockchain different is the protocol that basically brings all these nodes together towards, achieving a consensus on a transaction. So the DLT is basically an append-only transactions stored on a distributed computer network. That's DLT. And then blockchain is a subset of DLT. It's cryptographically secured chain of blocks. And then DAG is also a DLT. It's a different architecture. And as you can see, DAG and blockchain are different architectures, but they all actually they're all subsets of DLT. And all of these things are on a distributed computer network. Now, we will spend some time on the fundamental terminologies, and then we will get into what's happening in the industry. Okay, so now I think on each slide I introduce one terminology just to keep it simple so you can follow. So the first one is native asset. In the digital, like in the crypto world, they call it the digital asset. So native asset, native digital asset, you can say, is basically which is something programmed at the protocol level. If you look at Bitcoin, so Bitcoin is on a distributed computer network, just like we talked about on the previous slide. There's a Bitcoin protocol that basically, takes all the data and different nodes, and that's we talked about it's a digital cash, and then you have a wallet, and Ethereum, you have this Ethereum protocol, and it acts like a virtual machine. So you can actually deploy smart contracts, which we'll talk on the next slide. And on top of that, there is the applications you can deploy, and we will spend a lot of time on these applications in part 4. So you have the asset, native asset is something at this protocol level. Okay, in the case of Bitcoin, it's the Bitcoin is the native asset. In the case of Ethereum, it's Ether. Ether is the asset, which is needed to run any program on that network. Okay, so native asset is something that's at the protocol level. Bitcoin is Bitcoin, Ethereum is Ether. You can see the examples here. Now, next concept is smart contracts. So smart contract is basically a computer program. In this case, it's just deployed on a decentralized network. And you could actually have some conditions where if this happens, this digital asset we talked about, the native asset, could get transferred from one user to another user. So that's what it's called a smart contract, because it's no different than a computer program on a normal computer. The difference is it's on this decentralized computer network, and it's got this economics of the asset that's tied to it, where you can transfer something of value from one person to another person on on the internet, right? That's the whole thing you will hear about blockchain, that you can transfer. It's internet of value. Some people call it the internet of value, where you can transfer some asset from a user to another user without going through any like bank or credit card processing, PayPal, or anything like that, right? That's what this is, without an intermediary. Now, by the way, it's neither like smart in the sense of AI, nor it's a legal contract in the sense of from the legal sense. It's just the terminology that this community started using it. Okay. Now, tokens. So token is basically a digital asset that you can create from using a smart contract. So you can see some of the definitions of a token. Token basically could be a payment token, just used for payment purposes, exchange of value. Could be utility tokens, like offer access to a product or service. We will talk about this in the next section. It could be security tokens, which we don't spend too much time on, which is actually just like you own part of a company, just like stocks, right? And that's like basically equity tokens. If you tokenize the equity of a company, is a security token. Now you can also have, this is based on functionality, right? You have token types, and token types based on behavior could be fungible or non-fungible. Fungible means just interchangeable, meaning like if I have $1, USD, and if Christina has $1, we can just exchange, right? I mean, there are like one-to-one. There's so interchangeable, and there are tokens. When I say token here, it's just a smart contract program with some numbers that's stored on the computer network here, right? It's just stores just like an Excel sheet. We keep track of. Think of it as like a Google sheet, spreadsheet. It's on a cloud. The only difference here is this sheet is actually on a decentralized computer network, and there's a protocol that governs how like these things are transferred, approved, the transactions. So the tokens are basically a smart contract that just creates a new Excel sheet with some starting value, and who determines the value is the community, that we will see on the next few slides. Now, non-fungible means unique and non-interchangeable, like meaning like if I have a piece of art and Rami on the call, he has another piece of art, they're unique. I can't just exchange it, right? He would say it's some value. I would say mine is some, $1 million. He would say his is like $2 million, right? We can't just exchange, they're all like different, it's not like a dollar to dollar I can exchange. It's like each art is different. So it's non-fungible, like unique and non-interchangeable. So that's what ERC 721 is. It's called NFTs. We'll spend quite a bit of time on that towards the end. So all these are, bottom line, they're all smart contract programs that used to create these tokens. And you would see it sounds pretty simple, and now we're dealing with billions of dollars of business models that you will see later on. Now, dApps are basically decentralized applications that's running on top of all the stack. It's no different than a program that we use today. The only difference being, the front end would look just like any other website. And the back end, it's using all this, smart contracts, and it's using this entire stack. And you could have the asset, and which makes a big difference. And you will see later on, like games, they start using these tokens, NFTs, and all that. Okay, those are some fundamental concepts. Basically, we talked about, native asset at the protocol level, right? And then the tokens are programmed at the smart contract level. It's at these, programmed asset, you can call it, right? It's a program, basically creates, you can create an asset. And then we talked about smart contract. So I think basically we talked about only 3 terminologies here: native asset, there's a smart contracts, and then tokens, right? And then of course there's one more, that decentralized applications. So I think these 4 should be enough for you to follow. If you don't understand some of the terminologies, you can type in the chat box so I can explain. So now let's dive into the core part of this presentation, which is actually the blockchain ecosystem, right? I primarily focus on the public blockchain ecosystem. This is where a lot of innovation, experimentation is happening. I used to talk about enterprise as well. Enterprise governments, I took that out because, we don't have time for that. So let's talk about what's happening in the exciting public blockchain space. So this shows the evolution of this field from the angle of digital asset, right? So all started with the launch of Bitcoin, and I talked about many altcoins were launched. And then people were not happy with the volatility of these now cryptocurrencies, and stable coins were launched. Stable coins maintain the value. Then Ethereum was launched around 2015, and then many other projects were launched based on that. The difference is you can program, right? Bitcoin is very limited programmability, right? It's just for transferring. The idea was digital cash. That was it. Ethereum, it had shifted the industry in terms of like you can program, certain conditions when the asset gets transferred. And now that feature that you can program, it led to a lot of these things that you see here, like ICO, DeFi, NFT, now games, metaverse, and all that. So every year you'll see something is hot. Right now it's the games and metaverse, but these things are built upon all of these things happen over the last, I guess, decade now. Now let's look at some numbers here. So if you go to coinmarket.cap.com, you will see about 14,038. That was yesterday. Every day you will see new tokens. If you check now, in every day, more and more projects get added to the, this website, and they do a good job of listing all of them. Of course, 14,000 something. The total market cap was 2.6 trillion as of yesterday. Bitcoin is still a dominant currency in here. And this just shows you logos of some of the projects, right? And you can see overall, this is the total market cap. Overall, it just keeps going up, but it's very volatile. And what you see here is a combination of the protocol level asset that we talked about and the tokens programmed, right? Some applications that they have their own token that's actually programmed on top of the, I guess, protocol or blockchain. Now, the stable coins, I talked about stable coins. So, there's several projects here that started launching a stable coin where, in this case, the value of a stable coin is pegged to a fiat currency. Could be like a dollar or commodity like gold backed. It could be crypto backed. So it's been growing steadily. You can see, used to be a couple of projects. Now we got a dozen projects, and the total market cap is about $135 billion. So stablecoin does have a purpose in terms of, like, just to give you an example, when things crash like this or here, people sell the crypto asset, move their asset to stablecoin, and they just wait and see what happens in the market. And when this asset stops going up, and then they move from stablecoin back to whichever coin they think is going to go up. So it kind of serves the purpose of an asset, right? In the real world, I mean, cash in the real world. Here it's stablecoin in the crypto world. People just try to, use it as like a stable currency and see what happens in the market, and then decide where to go, where to invest. So now, let's talk about the infrastructure and dApps, right? See, this doesn't show you, the difference. And you look at this number, it's like 14,380. It's a combination of all of these, like Bitcoin, altcoins, stable coins, Ethereum, and other chains. They all have their native tokens. And of course, projects from ICOs, NFTs, games, all of these things combined, you will see they all have either a native token, or sorry, I should say native asset at the protocol level, or programmed token. So all of this, they just put everything combined here, right? To look, the next few slides, we'll dive deep into some of these things. So you will see here, next topic is infrastructure and dApps. So coming back to this stack we were talking, so just to give you an example of some of the blockchain infrastructure projects, meaning where you can really program and deploy some of these applications like Ethereum, I have it here listed, right? This goes back to the item I had, Ethereum and other chains, right? So these are the Ethereum and other chains here. And you can build a lot of these applications on top of this. Ethereum was being the first one. A lot of experiments happened on Ethereum first, and then of course all the other ones, they started to replicate. And they all have their own, improvements. Like Polkadot Cardano is like fast transaction, low energy efficient. Polkadot is like interoperable blockchain. Solana is supposedly the fastest right now in terms of transaction speed. So they all have their own, improvements, and you can build on top of it. So we will dive into each one of these a little bit, see where the industry is. But one thing I want to point out is each blockchain, since you can program and deploy all of these applications, has its own ecosystem. Its own world, actually. You can see just on Ethereum itself, like DeFi and NFTs, there are a dozen stable coins. That's not, I don't think it's shown on this slide. There are a dozen stable coins on Ethereum, and you can see tons of DeFi projects, several NFT projects, right? And you can imagine there are similar ecosystem maps for each one of these. Like Cardano, you can find one. I didn't put it here. You can find one if you search. Polkadot, you can find. Solana, you can find one. Similar, like, there are, like, each one has its own ecosystem. So now you may wonder, how do they raise the money for all these things, all these thousands of projects, right? I mean, again, all these projects, typically they are listed public ones are, you can see that 14,000 number, it includes some of these things, right? Most of these things. A lot of them die, we'll talk about that. So now let's talk about fundraising. Where do they get the money from, all these projects? So the red item I have here, we'll talk about that, right? So one is actually, there are firms focusing on investing in crypto, industry. There are like hundreds. I think there's over 250 or something. There's a website that tracks all of these guys. So this is top 10, right? And in fact, this news came out last week. And as of this Q3 of 2021 was the biggest in the history of this industry, 15 billion invested year to date. But then I think first, 9 months, right? So this is a big number. And you will see later on why so much money flowing in. There's a lot of interesting stuff happening, and you will see that. Now, the other way the fundraising happens is through selling their tokens. In fact, the Ethereum project, they raised money initially by selling some tokens. They raised $18 million, before they went live. That was like 2014 something. So this is the other way the money flows into the system. One is, of course, through VCs, see the potential of these projects. Go back here and you look, just to give you an example, if you put money back in 2017 in Bitcoin was $1,000. Today it's like 55, 60 something. That's like 60x return in like 4 or 5 years, right? 4 years. So obviously, this is very attractive for investors. So that's why we got all these VC firms. As I said, there's over 250 something. Now, the other way, there's another fundraising mechanism that was popularized by this, this field was token offering. Remember, I told you you could create your own token with a smart contract program. So that's exactly what this is. They're basically startups that are issuing their own token. It's like, issuing their kind of like stocks, shares, but here they issue tokens, and people would, anyone can buy. Used to be anyone. I'll tell you what happened. Anyone can buy these tokens. So you would basically have Bitcoin. You have to have Bitcoin first, to participate in these things. So what you would do is you would basically convert your US dollar, whatever currency you have, go to an exchange, like, that's a whole lecture on its own, how you buy these things. You can go to an exchange, buy the, Bitcoin, and then you would basically invest Bitcoin, or you trade Bitcoin for their token. So you receive the company's token, right? This project. So lots of money, if you look at this between 2017 and 18, just one computer program, it was ERC20. All you do is change the, the ticker symbol for your token and the supply, and a couple of changes, and you can launch your own token. Literally, like, 10, 15 minutes, you can launch your own token with your own, ticker symbol for your company. And it happened quite a bit. Like, I was watching this as a matter of fact, and a lot of companies in San Francisco and all over the world, they have a pretty website, and they have a white paper outlining their idea, which was Bitcoin was just a white paper, right? So that's kind of like a standard in the industry. It became the standard in industry where people just have a white paper outlining their idea, concept, what they're going to do, and the roadmap. And they start, you can buy on their website. You can trade your Bitcoin to their token. And the idea is they would sell these tokens at a very low price. For example, just to give you an example, 0.1 cent per token. And the idea is when it goes on an exchange, it becomes $10, so that 10x, or it could be you could lose money too. So it was a very risky thing that was going on, and there was $34 billion raised between 17 and 18. A lot of countries looked at this like, wait, what's going on? And they basically, you can see some countries banned, like China, India, Pakistan, they banned, and some countries are like favorable, like small countries like Singapore, Estonia, Switzerland. Switzerland was like #1. That's where some of these things like Ethereum, they're all registered in Switzerland. And then some countries are favorable, and many of them, they, like the ones like, they kind of still don't know what to do with it, right? For example, US, they want to tax the crypto asset holders. They just passed this, infrastructure bill. I think Biden signed it. So they want to tax crypto assets. However, they haven't done anything in terms of new regulation on how startups could use these fundraising mechanism. They still use this 1930s Howey test. In fact, I was at a conference last week. I was with a bunch of lawyers. Yeah, they said nothing changed. They're not doing much on that, but they just a lot of these countries are even India. I think last week they said they're going to tax all these crypto assets, but they don't want to use crypto as a means of payment. Anyway, so you can see the map here. It's in fact, SEC started issuing subpoenas to a lot of these companies raising money from U.S. investors. A lot of them are scams. I think maybe 80% are even, there's actually a whole website called ICO, drops or something, that they track all these, scams and stuff. So there were a lot of scams, so which triggered regulation. And what happened in industry, the ICO started to evolve into different things. When you put resistance, things usually evolve into different things, right? That's what happened. So primarily in response to SEC's subpoenas, companies stopped and doing this, and you can see it died, right? Slowly died, and that became something else. So IEO. So what happened is exchanges started doing the due diligence. The main thing was the due diligence, right? Who's investing, doing the KYC process, and who are these guys who are running the project, who are investing. So in fact, they block us if you try to participate in IEO. So you can go see, these are some of the IEO websites. There are also IDOs. We'll talk about exchange, decentralized exchange soon. The last one is security token offering, which is actually, try to do this token offering in compliance with security laws in one or more jurisdictions. And you can go take a look. And I tried to do something in this area on a project, and it was the difficult thing to do. You try to comply with something, but the rules are not clear. You cannot comply, and the rules are not clear, right? So that was the case in the STO. And now, just to give you an example how this works in the case of IDO, or even IEO, so they have a platform where investors could actually take and invest your token, and you would get the return, and the platform will do the due diligence of, whether they're scam or they read the white paper of these projects, and it's kind of like what the VC, do, like they do what VCs do, but they do it in the blockchain world. The investments are in the crypto token format, and then even the returns are like that. You can see some of the projects, the platforms here, blockchains here. This is the number of projects they've invested in, money raised, number of participants. These are investors like here, market cap and all that. So now that was just the fundraising part of it, right? Now let's look at the decentralized finance, DeFi. So in the blockchain world, you saw there are like 14,000 some tokens, right? How do you go from one token to another token? Just talk about, say, you have Bitcoin and you want to get Ethereum. Excuse me, there are two ways to do it. One, if you have do you guys hear me?
Yes, we can still hear you.
I got a pop-up message, the internet unstable. So DEX, there are two ways to do it, right? Centralized exchanges, like in the US, Coinbase is well known company. It's a public company now. You can go create an account and you can buy Bitcoin, or they can trade also. There's also decentralized exchanges, which are just smart contract protocols that would basically, you can sell your Bitcoin for Ether on a peer-to-peer fashion. There are lots of DEXs around there. You can see the list there. You can even see the trading volume. Like you can look at the DYDX 24-hour trading volume is is it 2 billion? Yeah, it's $2 billion, right? So it's not small. And there's lots of protocols like this. You can take a look. Okay. Now, what's DeFi? So DeFi is decentralized finance. So it's basically a peer-to-peer financial system built entirely on blockchain, where you do all these things like lending, borrowing. Just to give you an example, let's say you have a Bitcoin, which is like 60,000 or whatever. You can invest in in this protocol, and you can get return. That's lending, and the borrowers can actually lock up their asset and, like, let's say, a Bitcoin, and they can get 50% of 60,000, let's say $30,000 worth of another coin, and they can go do something else, invest on another project. Of course, if market crashes, the protocol will sell their collateral, right? Just like what happens in the real world. The lender, bank, would sell your asset, right, to get their capital. So protocol would do that. And there's a lot of complex protocols of how this is all done. And you can see, these are some of the protocols like lending, DEX, we talked about. And you look at this, how fast this has been growing. The DeFi, the total value locked, when they say locked, it's just smart contract protocol. And there's lots of protocols. And if you go to the website defipulse.com, it'll, I think, list all the protocols. You can see this has been growing like crazy. And you can see, in fact, this even breaks down into, value locked as a total, $295 billion, and per blockchain too. We talked about those infrastructures. These are like Ethereum 180, Binance, PAD, and so on. You can see this is a big industry. And you can see why it's attractive for venture capital firms and even individual investors. So folks who have a lot of crypto assets, they want to put that to work. So they do DeFi. They put the asset in a protocol and get return. They actually can, take their asset, borrow something else, and take that money and invest on some upcoming projects. Now, that's DeFi. Now let's talk about non-fungible tokens. So these are, remember we talked about non-fungible tokens. Again, it's a smart contract. It's unique and interchangeable. It can be used to represent unique and interchangeable, non-interchangeable asset, right? Let me go back, since I introduced you guys. Let me go back to this definition here. Here, we have it here. Token, it's based on the behavior. Fungible is interchangeable, ERC20. By the way, the DeFi, stablecoins, and the entire DeFi ecosystem primarily is built on this ERC20 or ERC20-like tokens on other blockchains. And then non-fungible tokens are unique and not interchangeable. It's basically digital asset or token deployed on, in this case, is ERC721 is on Ethereum, and which basically led to the creation of this whole new industry called NFTs. You probably heard about this by now. It's almost every day we'll see something in the news about it. So here it is. So it's been growing at a steady rate since 2018, and you can see it could be used to represent photos, anything on digital, like photos, audio, videos, digital file. And you can see the segment here. It's used in gaming, metaverses, sports, collectible, and so on. And if you look, the market size is about $52 billion as of yesterday. these are some of the top platforms where you can buy NFTs, the different types of NFTs. To give you an example of what it is, here is an example of, obviously this is the highest one. So back in March 2021, a digital file was sold for $69 million. It was bought by a guy in Singapore, a couple of guys in Singapore. And it's a JPEG file on blockchain, stored on blockchain, the hash. And the other one here is the, top shots from NBA. And this is a company called, Flow. They have this thing called NBA Top Shot. They license the top shot moments from NBA, and they're selling it as an NFT. And this is back in May 2021. At the consensus conference, they reported they have over 700 million in sales and 1 million users, right? Just gives you an idea. Now there's a lot more stuff happening, like I think Coca-Cola, Nike, and like a lot of like Matrix. They're talking about issuing some tokens for movies, and yeah, you can just search about it. Now let's talk about a couple minutes. Spend a couple minutes on games and metaverse. A lot of the things we talked about are used in these, games and metaverses. Just to give you an example here, now this is a trend in this industry or blockchain industry, blockchain games, where it's called play to earn. So you can earn rewards in the form of tokens. So basically, you can be playing a game, and you reach certain level, and you get rewarded. Get a token in your wallet. The interesting part is that token you can sell, right, and get something else. You saw those lots of tokens out there. You can take it and sell it to a stable coin or buy something else. And here you can see, if you go to this website, that this website tracks all the games. I think there's over 650 games. A lot of startups, they're trying. And the next evolution is metaverse. So metaverse is basically, a digital virtual space, created by combining either it's a mobile phone or your computer, PC, combined with virtual or AR headsets. And you can see this chart shows you, it's basically intersection of the physical world, the virtual world, which is, AR, VR, MR, right? And you got the virtual economy. This is where the blockchain, you may be wondering, where is the blockchain here? This is where the blockchain comes in, the virtual assets. So you could own, for example, the game could have a token, not example, that's what these guys have. They all have their own native token, which you have to buy to play that game. And inside the game, or even metaverse, they have assets, like you want to look cool in the game, they have, different skins. Those are NFTs, non-fungible, tokens. And so to play the game, you need an utility token. And when you win something, or, go to a certain level, then you get tokens, right? Reward tokens. Also, there are assets within that virtual world that you can buy. And, there's a company called Decentralized. It's been around since 2015. This was launched on blockchain, where you can buy a land, a piece of land. I heard somebody bought it for 10,000, which is nothing in the Decentralized. So same thing in a game, you can own assets in the game. The interesting part is the assets. You can take that asset from one game. For example, you have something in Axie Infinity, take that asset, go to DEX, decentralized exchange, sell it, and go into another game. See, this portability is what this blockchain enabled, right? It wasn't there before. It's all in the traditional games, like you play, you have some tokens, rewards. It's a closed system. It's only in that game. And you may have other games. It's only in that game, right? But what blockchain enables is you can take those assets, you can sell it, right? You can sell it and just cash out and buy stuff in the physical world. or you could just take it and sell it and move to a different game. So this is the, it's a breakthrough which was, just being enabled by this blockchain space. There's all these tokens we talked about is enabling that. I think I will stop here. Only have 6 minutes left. Okay, any questions, comments?
Yes, Doctor.
So in fact, the metaverse, a couple of weeks now, I think Facebook openly, Mark Zuckerberg openly, mentioned or did a press release that they're going to focus. Well, they changed the name, right, from Facebook to Meta, and I think Microsoft and all the big companies are, pushing. It's been going on for some time, but it seems like now they think it's a pivotal moment, and everybody is pushing it. But there's a lot of projects in the blockchain space as well that there's actually I don't think I have the link here, but there's if you go to coinmarketcap.com, they just last week they added a separate category called metaverses. Let me see if I can show you so you can go check it out if you're interested. So if you just go to, you guys still see my screen?
Yes, we can. Ramesh, I just wanted to interject very quickly. We are running a little bit short on time.
Yeah, I'm done. I just want to show you, just go to CoinMarketCap and just click on Metaverse, and you can see all the projects. That's all I wanted to say. Since I'll stop here. I know you said 1 hour. I left only 5 minutes for Q&A. Okay.
Thank you very much for sharing, Doctor. Is there any chance we can have a link to the overview?
Sorry, what was that, Michael?
Yes. Hi, this is Rami with the FedEx Institute. Yes, we'll be sending out the link to everybody for this recording. It'll be posted on our engagement page with FIT and our FIT Blockchain 901 engagement page. So I've just sent that link. It'll be posted there. And if Ramesh is okay with the presentation being posted, we'll post the presentation there as well.
Hopefully there's an NFT to the presentation.
Actually, they did that last, the conference is now last week, right? 2 weeks ago, they started issuing tokens for every speaker. I was a speaker at this NFT NYC conference.
Wow. Yeah, that was a great presentation.
Oh, thanks.
Yeah, if anyone has any questions or any comments, please feel free to unmute your mic, or if you feel uncomfortable, please feel free to add it in the chat box or the Q&A, the chat box mainly.
Dr. Ramadoss, what is your opinion on Wonderland and staking time?
What's my opinion?
Yes.
No opinion.
The call came out of the planet.
I try to, I don't want to give you advice on financial advice, because this is very unpredictable market, right? So, I mean, I do, track the industry, invest a little bit, but nobody has any clue on which one to bet on. Nobody, right? One thing that people tend to do is this, right? People look at who's the team behind it, what's their track record, and also who are the investors. Like, remember I showed you where VCs, crypto investors who are, bottom line, it all boils down to due diligence. And most of us don't have that time or energy to do the due diligence or background, right? So you kind of rely on, these VCs that, assuming that they have done their due diligence. So people take that one approach. They look at who are the backers, right?
Right.
And the assumption is, okay, the backers they know they have a team and they're putting big bucks into it. So you're assuming that they have done the due diligence and you bet on it. That's one that people do. The other one people do is they look at the team, like who are the, what they have done before, what's their track record, do they have look, I told you about ICOs. A lot of people raise money, but they cannot deliver, just like the real startups, right? They raise money, but they cannot, there are three categories. Some companies raise money, they run away, scams. Some companies, they try, the right team, they tried, but they couldn't deliver.
Right.
And some, they do make it. So and nobody really knows, right? And that's why, just to summarize, just look at who are the backers and who's the team behind it. I don't want to give you specific advice on a specific project. Of course, I have my personal opinion, but I don't want to tell it to you, and it could go either way.
I appreciate your honesty and transparency. Thank you, Dr. Ramadoss.
Any other questions? You have only 1 minute.
Well, I think we'll go ahead and end our session there. Thank you very much to Dr. Ramadoss for speaking today. Thanks to Blockchain 901 for setting up the introduction and facilitating today's meeting. And everyone, thank you for joining, and hopefully we can see everyone at our next session. Thank you so much.
Do we just wait here until everybody drops out?
Yep.
Okay,
Just waiting on.
I think one more.
Yeah, Ramesh, I thought that went really well. I think your slides are very informative, and you're like very calm, and when you're speaking, it's really easy to listen to you. I think that's why there weren't that many questions, because I think you covered everything so well.
Well, that's
Like
fine.
at like an intro level that was easy to understand. A lot of times it's overwhelming listening to all the different things that are going on.
Yeah, it's really hard to keep it simple.
Right, I know.
I have I've given actually, I think this is the 89th talk in the blockchain topic. So I've been able to kind of like, take stuff from here and there. I also, depending on the audience, right? Sometimes, I skip all the Bitcoin and intro, go directly into the ecosystem, but I assume they hear like we'll have a mix, right?
Yeah.
I take slides from here and there from my presentation, depending on the level. Yeah, but it's still a complex field. I mean, it's to explain.
Yeah, it was really easy to understand. I think this will be a popular recording for people to go back and review, or if people miss the I mean, I'm going to use it. I'll post it to like with a link to it, because I think it's a good one for everybody to be able to kind of like an intro type course or webinar type thing.
Yeah. So maybe Rami, did you send me the video? I'll just take a look.
Sure. Let me actually stop the recording. Whoops.